We are in conversation with the management of Westlife Developers. Remember, they run the McDonald's franchisee in select parts of India. Thank you, sir, for speaking to BloombergQuint. Mr. Jatia, let me begin by asking you regarding the second quarter performance. On the face of it, it's much above the street expectations. If you could run us through the second quarter performance and the kind of same-store sales growth that the company has delivered.
Sure, we are really excited and delighted with our results for quarter two. First and foremost, our top line grew by 13.2%. But what is even more exciting is that on top of a phenomenal last year of 26% same-store sales growth, we were able to grow another 7% on top of that. So clearly, in a very difficult environment, we were able to not only get new customers, but also bring our old customers back in more often. So I think, but the more interesting part was actually we were able to retain these sales gains, which made a significant delta in our margin. So for example, our PAT grew by over 200% and 200 basis points. So restaurant operating margin, operating EBITDA, profit before tax, profit after tax, all of them kind of got better by 200 to 250 basis points. Okay. So we are really delighted with the fact that in a difficult environment, not only have we retained customers, but also been able to retain margin and grow it.
Okay, good to know that, sir. Talking about the same-store sales growth, of course, there has been some kind of a slowdown on the economic front. Has that impacted some footfalls or growth? Would it be better in the second half if you could guide us through what exactly is happening on the ground level? And also, if you could tell us how is the pricing in the marketplace for your products? Have you been looking to gradually up the prices, to improve the margins further?
Sure. So basically, the headwinds are there. As we can see, there is retail sentiment is challenging. However, based on the platforms that we built over the last 3 to 4 years, by adding new occasions for the consumer to visit McDonald's, I think that's been the differentiator, at least from our point of view. So first and foremost, a simple example is we've become a beverage destination for the consumer. By offering them handcrafted coffee and other beverages, the consumers now coming to us during a day part like the afternoon to enjoy a nice cup of coffee at McDonald's. So we've come into their consideration set for that occasion. Similarly, we launched our McSavers value meal earlier this year, and that gave the consumer a lot of choices. So they could bundle products as per their preferences, which included getting a cappuccino. And typically our cappuccino is 100% Arabica, and the product is really come out very well. So the consumers were able to get that along with a burger at 89 rupees. So that coupled with McCafe, with the growth in delivery, I think we've been able to counter the consumer sentiment by building these new occasions. And that is what has helped us not only retain the 26% of last year, but grow 7% on top of that. So I think it's a combination of all these initiatives that have helped us counter this slightly difficult environment that we are facing.
Okay, sir, you said that you launched the promotional offer on McSaver. Is that also helping the same-store sales growth? And if you could tell us, is the billing per unit or per customer also improved on a sequential basis and on a year-on-year basis? If you could share that qualitative data.
Sure. I mean, we don't see McSavers as a promotion. What our philosophy has always been, right from the days of the Happy Price menu in 2004, that our philosophy is to give consumers everyday value. And when they come to McDonald's and they buy anything for that matter, they should feel that they're getting value in that. So I think, yes, McSavers has helped a lot, because we've sort of upgraded from the Happy Price menu into a little bit of a meal option for the consumer. And as they are able to get a meal at great value, that's driving in new footfalls and more footfalls. From a average spend point of view, we increased prices only in April of last year. So in this quarter, really, we didn't increase prices, but the average check has remained quite steady for us. Good news is in this difficult time is not dropped. but because of the product mix, it's only slightly gotten better. But a bulk of our growth has come by new customers coming into the fold as well.
Okay.
So that's really how it's sort of played out for us.
Okay, and sir, is the new customer coming to the store, or the online ordering has also gone up for McDonald? And if you could just give us a breakup, because there has been a lot of confusion in the minds of investors and analysts that a lot of these food aggregators are coming up and they provide a lot of choices to customers, especially in the fast food products, including burgers. So how really is online sales doing on your platform as well as from other aggregators like Zomato or probably Uber Eats?
No, we've always maintained that we think that wherever demand for our food is growing, we actually love it. So if consumers are eating outside food at home, it's a new occasion for us to cater to. And whether it comes through aggregators or our own platform, the fact that they want a McDonald's burger or a McDonald's wrap is really what works for us. Fortunately for us, of course, that business is growing extremely well for us. But simultaneously, our in-store business is also growing well because McCafe, breakfast, and particularly McSavers, that all grows the walk-ins as well. So I must say that the delivery business, the delivery market was under leveraged in the country, and with more and more options coming through aggregators, that has been growing crazily because for the consumers, it's a great convenience. But the important thing is, as long as from our point of view, they consume McDonald's more than anything else, that works for us. So we are loving it.
But sir, how much of your sales coming from the
online ordering? You can see that in the margin growth as well.
Okay. How much of your sales coming from the online ordering and the delivery side?
We are pretty much now an app-based business. While we don't share breakup between third-party aggregators and our own app, the important thing is that it's pretty much digital. So the call center, we've been actually trying to sort of reduce the impact of that on our business because we feel the convenience of an app is really, really good for the consumer. So the online part is growing quite nicely, both with third-party aggregators and our own app.
And Mr. Jade, one final question on the store edition plan. In terms of the next 6 months or 12 months, what kind of a store edition run rate are you internally working with per quarter? And if you could share, what are the kind of additions moving ahead? Because in the quarter we didn't see much of store edition coming in. Moving ahead, do you think in the second half things would pick up in terms of store editions?
No, it's not like that. If you look at last year and the year before that and the year before that, typically in the first half we add 9 to 10 restaurants, and typically in the second half we add about 15 to 20 restaurants. So we are on track to grow the 25 to 28 restaurants that we do every year. Additionally, we maintain our target of about 400 restaurants by 2022. So we are pretty much on track with expansion. No change there at all.
Okay, good to know that, sir, and all the very best for the coming quarters and the store edition plan. Thank you so much for speaking to BloombergQuint.
Thank you.